So can we get like just one day of pure and simple earning where nothing breaks, nothing gets halted, and nothing gets tweeted? Now, literally, it's been like days and days of some drama going on in the market. Market itself is very confused. They don't know which direction to take. They don't know if the Fed is going to increase the interest rate by 0.5%. And also, they don't know what to expect in the earnings and what's going to be the guidance for the next quarter or for the next year. So Affirm was supposed to report earnings. I'm sure most of you already know what happened yesterday with the drama, but let me just fill you in quickly. So Affirm was supposed to report the earnings after the market closed yesterday. And then somebody tweeted, keystrokes, human error, the results earlier. And then the whole drama started where the stock went through the roof looking at the results, the initial sneak peek. And then Affirm decided, you know what, we are just going to release the earnings now. They could have just come out and said this was an error. We are instead of deleting the tweet, they actually deleted the tweet. They should have just came out and said this is an error and we are going to release the actual earnings after the market close and let it play by that rule that they had. But nope, they released the earnings and that created a hell of a volatility in the stock. Now, just to be very clear and as a disclaimer, I like company Affirm. The industry as well, the company as well. I think they are the leader. They are going to do fine in the long term. But the earnings had me concerned as well. And what I'm going to share with you today is the breakdown of the concerns that I have. It might be not as simple as what you think it is, but I'm going to share with you what I really see as a main point, not their guidance for next quarter. Because again, this business is still evolving. This business is still growing. This business has a long way to go. The partnership that they made with Amazon, with Walmart, with Apple Canada, with Target, they're very new. And these kind of things take time to materialize. One time, their biggest customer, Peloton, we know what's going on with Peloton. So I feel that we are going to see some headwinds getting into 2022, like any other company. Name a company which is solid, like Apple dropped almost by $4. If Apple drops like that, you know something is wrong in the market. This is not based on fundamentals. But there is one concern that I have with Affirm's earnings, which I'm going to share with everyone here. Okay, so pay attention to this right here. I think you can see, yes. Okay, so we are not going to talk about the third quarter forecast. We are going to talk about the second quarter results. So if you first pay attention to the revenue, their revenue was 361 million, 77% year over year, which was a great number. Then the net loss was 159.7 million. Whoa, that was a big net loss. Estimate or the consensus were the high was negative 55 million, like that was high means they will have less net loss. And then most was about 75 million. They came out with 159 million. That was huge. And they are seeing that this includes the stock-based compensation right here. If you see, second quarter net loss 159.7 million includes increase in stock-based compensation following IPO and 34 million additional expense recognized based on a change on the change in fair value of the contingent consideration liability associated with company's acquisition of PayBright. Okay, so stock-based compensation, number one, and number two, the 34 million based on the PayBright's acquisition. Understood. That's why the net loss was really, really high. It's a one-time charge. It's not going to be the same in the third quarter for 2022 for them. But one of the main concerning factors for me is sales and marketing number. If you have not, pay attention. Their sales and marketing number is about 149 or some million dollars. Okay, I don't have the exact number in front of me right now, but when I was looking at the sheet, that was one thing that was really concerning. 149 some million dollars for sales and marketing. They were estimating about 60 to 70 million, double than what they were estimating that sales and marketing. So if the sales and marketing number were double, that means they spent a lot more on sales and marketing. Their revenue should have been a lot higher. The revenue expectation was about, I would say right here you can see, the estimate was about 332 to 355 million. So the top end was 355 million. They came out with 361 million. So yes, up from 355, but not 100% higher, not 50% higher. They were actually, from the top end estimate. The top end estimate for sales and marketing effort were about 75 million. They came out with 149 million or something like that. That number was crazy because that number shows me that they spent a lot more money selling their product while the return was not there. And I know you might say that, I'm contradicting myself. I'm saying I like it. I like it. I like the company, I like what they're doing, and I like the industry because I think it has legs to run once we get more regulation in the industry and once we have proper credit monitoring. Absolutely. But what's going on in this particular sales and marketing, I would like to dig deeper on it and see why, when they spend double the amount, why didn't they get double the revenue? I'm not expecting double the revenue, but I was expecting if they're spending almost $75 million more on sales and marketing, which is double their estimate, their own estimate, then they should at least get 25% return on that, right? So that should have been higher. So that's one concern that I had. The second concern right here is the third quarter forecast. They see a revenue of $325 million to $335 million. Now, remember this. First quarter of a year, which is this right now, for them it's a third quarter, but technically it's the first quarter of the year. The revenue expectation is always less because people just came out from the holiday season. They are not going to spend that much money. This is a given fact anywhere, even if you look at Tesla, even if you look at any of the companies. The first quarter expectation, they're saying third quarter, but technically it's first quarter at the beginning of the year, the revenue estimates is less. The estimate was $334 million or $300 million to $370 million. The range was between this. They're saying $325 to $335. So they are not even touching the middle of the range. I feel that this they're going to beat. They will come out and they will have a better earnings in the third quarter because I think Amazon effect is going to take some time slowly to get added into the balance sheet and into the numbers. So this is really crazy of what happened yesterday. But there was one good thing that happened. Now I have 5 calls, $80 for April. I think they're toast. I think I'm gonna lose majority of it. I think I'm gonna get out in the next bounce, taking a loss. Actually, one of the Discord member asked me yesterday, what are you doing with it? And I was losing 15%. And I was like, you know what? I feel like gambling. I'm gonna just go ahead and let it be. Because I feel like they're going to have a beat and they will have a good expectations for the next quarter. And I'm losing 15%. I can very well close it and take 15% loss because it's at least better than what it was before. Before I was losing almost 50% on it. And yesterday during that volatile phase, it actually went positive. It actually went green. And I was thinking about it, but again, I was thinking that they're going to come out with the numbers after the earnings and we are going to see some more movement in the stock price. But one thing also happened. Not all bad, right? We took an absolute good opportunity of this volatile day or volatile hours actually. Actually, you know what? Let me share my Discord and I'm going to show you the trades that I made and I alerted the members on the Discord. Give me a second here. Let me actually share this. Okay. So what we did yesterday was that when I saw stock move like crazy and I had actually no idea about that there was a tweet out there and I was like, I don't know what's going on with the firm. This is crazy. I'm thinking of playing straddle here. Now, all of you, those who know about straddle is a strategy where you buy a call and you buy a put. So you do 2 buys, call and put. So what you're doing is you are protecting yourself for any sudden movement in any direction. So if the stock goes up, you make money. If the stock goes down, you make money. But it has to be drastic move. It has to be a move more than 15-20%. If it only moves, say 10% or what, that's not enough. That's not going to give you or break even what you spent because you spend a lot of money because you're buying on both ends. You're not selling, you're not covering yourself or you're not hedging in any way. So now I placed this alert right here. Yes, you can see. So what I did was at around 1:50 p.m. yesterday, I posted an alert that I'm playing a straddle here. Same explanation. I actually played a straddle on Python, but I said that I'm playing a straddle here and it's risky and I'm going to go ahead and I shared this image. So what I did was I bought one February 22 $81 call and then same thing, I bought one $81 put. Okay, my total net debit was $1,600. This is what I paid for this one contract. Okay, so then when the crazy movement started to happen, when the tweet came out, this was right before the tweet. This was only on the price movement. I quickly went ahead and I executed this trade. I was like, okay, this is too juicy right now. That means a big movement is coming. Either the stock is going to plummet or its stock is going to skyrocket because it's already moving so much. So then what happened is that at around 3:06 p.m. when the stock was halted, then it was released, halted, released. As soon as it was released, I saw my put position, the put side of my position right here. As you can see, this is 1st February $81 put, went up 271%. And I was like, you know what? And with straddle, you can actually close one at a time. You don't have to close the whole position. You can close your call or you can close your put first or after, doesn't matter. I was like, you know what? I'm going to go ahead and close my put over here with 271% gain. By the time I closed it, I got about 300% gain. It was moving so quickly. Then what I did was I closed my call for a 90% loss. So I closed my put for a 300% gain and I closed my call for a 90% loss, giving me a net 210% gain or my 200% gain on the position. So we made 200% in a couple of hours on Affirm's volatility. And of course, if I would have held it, I would have lost 100% on my call, absolutely, but my put would be printing more right now because I had an $81 put. And I could have sold my 100 shares for $81. Right now it's trading like 53 or some dollars in the pre-market. So it's absolutely insane what happened yesterday. I don't like this, and that's why I even said that I don't like, even in the Discord, in the stock chat that we were talking about, I even said that, you know what, I'm closing my straddle here because I really don't like the volatility that I'm seeing in the stock, because we are not gamblers here. We are investors, and we are not looking for that quick dollar. We are looking to invest for long term, and we are looking and believing in the company that are going to stay for the long term. So I really didn't like what happened with Affirm, and of course their guidance for Q3 is not what I was expecting. I was expecting the guidance to be better, but Q3 or Q1 of 2022 is always going to be lower in expectation, especially now when people are not spending money. They're scared. They have so much money now, so why would they want to buy now, pay later when they have so much money of their own? Because they're not putting the money in the stock market. Overall, I feel industry is in its infancy, and it will take some time to mature, and it'll take time to kind of go. And look what happened. Bank of America came out and they downgraded Affirm. It's a joke. Like anytime a stock has a bad earning, these analysts come out and they downgrade. They're like, we are seeing 20% down pressure right now on the stock. Stock can go down 20%. Awesome. Yes, we know, because they didn't give a good earnings, or their loss was higher, or the Q3 projection is less. Of course they're going to go down. It's no rocket science here. I could come out and I could say, you know what, the stock is going to go down 17.5%. And so again, I don't really pay attention to that. I look at the industry as a whole. They have signed so many out. They have signed up so many customers. Everybody wants to get into buy now, pay later, which is not a good thing, but Affirm is a leader. So I wouldn't spend in any other buy now, pay later right now, because I think that there is so much competition and there is so much unknown right now. But Affirm, as I said, my calls are toast because they were April $80 call, unless we have a rate hike that everybody is expecting and the market comes through the roof, then I might recover some money over there. But I'm not in a rush to close them, because currently right now what I'm looking at, that you know what, I'm going to see how next few days are. It's going to be highly volatile, as I said in my CPI video. So if you have not watched it, please watch it, because that video gives you an insight of what was expected yesterday and what happened yesterday. So I hope I provided some value. For more one-on-one conversations, click on the Patreon and Discord link mentioned in the description below. And also click on the like button. Consider subscribing if you like videos like this. Hope to see you next time. Until next time, you all have a sparkling day.